Welcome back. In conversation now with the management of Jindal Stainless with good sequential improvement in margins during the quarter. Tarun Kumar Khulbe, the CEO of the company, is now joining in. Mr. Khulbe, thank you for sparing time and joining us today. You know, the first question has to be about the overnight developments, right, with regards to the tariffs on India from the Trump administration. How much of your business relies on exports to the US? If you could share that number. And considering this action, if it is a significant number, do you see that now trending down considering the recent developments, or you're hopeful that things would turn for the better in the near term?
Thanks always, first of all, for inviting over here. And yeah, so this tariff in US, this is definitely a hot topic for the discussion. But if I talk about our industry, that is stainless steel and steel, here the tariff comes under Section 232. And these tariffs were already, they have come in two tranches. The first tranche was in 2018 in March, where 25% tariff was given. And then in this year, last month, June, beginning of June, around 4th of June, another 25% was put the tariff on the steel and stainless steel. So already our industry is having a tariff of 50% from the last month itself. Now,
yes, go ahead.
Yeah, and now if we look at from the market perspective, US, if we look, they are a net importer so far as stainless steel is concerned. And we believe that immediately ramp up of capacity there also would be taking time. So their market is also going to change, the pricing and all in their market. But so far as we are concerned, as a company, I will say that we are a lot domestic focused company. Our markets are doing well. Here, the demand in the domestic is pretty well. And we are continuously focusing on it. And the balance, we are balancing the exports as a balancing number. So US market, otherwise, in terms of while it is important, and we consider that to be important, but in terms of volume, it is not so significant for us. And that is why we are able to constantly give the growth, and we are able to keep our commitments of the volume growth, what we have given to the market. And we are confident that whatever the guidance we have provided, volume growth, we will be meeting that.
So, Mr. Khulbe, just confirming, your exposure to US is very minimal. Can you quantify that for us? Is it low single digits? Is it high single digits? Because around 17% of Q1 FY24 revenues came in from exports. So just wanted clarity on that. And when you say you'll be able to maintain your guidance for FY26, what is the volume guidance that you have for FY26? Q1 did 9% growth in terms of volumes. What will you do in FY26?
Okay, so Sunil, over a period of time, like you mentioned, FY24 Q1, the markets have changed, the demand supply situation has changed, everything has changed over the last 2 years. So many rulings have come and trade protections everywhere. Everything has changed. So I think that number we should not be considering. To answer your question, you're on it is on the lower single digit. But as I said that. We are pretty focused on domestic. Domestic markets are doing fairly good, and our demand is well. And we have provided a guidance of 9 to 10% over the last year for the annual guidance. And that annual guidance, we believe that we are sticking to that, and we feel that we'll be meeting that.
Okay, so 9 to 10% volume growth for FY26, exposure to the US, exports to the US in low single digits, and you're already faced or slapped with a 50% tariff. So there is no incremental headwind. And this 50% tariff happened in the month of June. What about realizations? How are prices today versus Q1? What is the number? And even for EBITDA per ton, how are you likely to trend from here on, sir?
So EBITDA per ton, Rima, also we had provided a guidance of on a console basis 19 to 21,000 rupees per metric ton, and on that we have already performed in Q1. So far as prices are concerned, let me put it like this: that in the stainless steel, always we have been saying that prices are a factor of the raw material movements, and so far as Q1 prices average and current prices are concerned, because in the raw materials not significant movement, so prices are also have not moved much. They are at a similar level. But again, I'll repeat that our price movements are mainly with the movement of the raw material prices.
Mm-hmm. So, Mr. Khulbe, now talking about the other one, Jindal United Steel, you've been going around about a 200 crore a quarter EBITDA run rate. Do you expect that to sustain for this year, or do you see some more incremental upside to that number?
So, Hamed, this Jindal United Steel, JUSL, first of all, let me just put it again that this is our 100% subsidiary and of JSL. And this company essentially runs on a job work model. And because our volume growth is there, and already I have confirmed that whatever volume growth guidance we have provided, and we are sticking to that. So aligned to that, JUSL EBITDA is also moving. So yeah, I think we should be hitting the similar number what you have just mentioned.
Okay, last question before we let you go, Mr. Khulbe. What is the capex spend in Q1 that you did, and what is the targeted debt that you will be looking at, considering the FY26 capex number as well?
Okay, so our targeted net debt is around 35 to 3,700 crores. This guidance we had given, which in the beginning, at the end of Q4, it was around 4,000 crores. Capex guidance we have provided for this FY26 is 2,700 CR, and in Q1 we have done 665 crores capex.
Mr. Khulbe, we leave the conversation here. Thank you very much for joining in. For the markets, still down.